Today, I want to dive deep into what I think is the easiest rental real estate investing strategy for beginners. This is the exact strategy that I used when I bought my first house. And this is the strategy that helped me build a foundation and scale to a portfolio that's now worth over $7 million in less than 10 years. Now, I don't need you to think that you have to copy this exact strategy, but what we're going to talk about is what made this strategy good in the first place. And I want you to learn and understand those principles so then you can apply them to your situation and start your path and invest with confidence. So when it comes to real estate and rental strategies, there's really two main trains of thoughts. There's the appreciation markets and there's the cash flow markets. These are the two mindsets that you need to understand before you start investing in real estate. And let me explain what this means. Basically, when I say appreciation markets, I'm talking about buying in areas that already have high demand or are projected to have much higher demand. And these are generally going to be properties that are more expensive. Think of areas like Toronto, New York, California, Chicago. These places are hubs and they have much higher priced real estate because the demand is proven and the demand is probably going to stay steady for the long term. So the bet is you buy in these types of areas and you bet on the appreciation. So for example, in these places that are much more expensive, you might find a place for $700,000, $800,000. And if it goes up by 10, 20% in the next 4 or 5 years, you're talking making over $160,000 to $200,000 in pure equity just through the appreciation. And this is what makes people very wealthy. Now, there's a flip side, there's a contrast. If you do buy something very expensive, well, expect your cash flow to be lower. The cash flowing market is when you buy places that are outside of the city or outside of areas that don't have that demand today. These are places that are, 4, 5, 8 hours away, or think about the Midwest in the States, or if you're in Canada and Ontario, think about places like Windsor. These places don't have that, demand, and their houses are much cheaper. But that gives the opportunity for much higher cash flows because generally the rent is the same. So if you buy a place, for example, in New York for $800,000 and you rent it out for $2,500 to $3,000 per month, well, you could probably buy another place that's much farther out for $400,000 and rent it out for the same $2,500 or $3,000 per month, and your ROI is much higher. That sounds all great, but in these lower demand areas, the appreciation isn't as much. So, you do buy a place for that $400,000 and it goes up by 10, 20%. Now you're talking $40,000 to $80,000. That's still good money, but it's a lot different than buying in an appreciation market. So the strategy that I'm going to explain in a minute is the perfect balance between the two. It has best of both worlds. And to me, that is a winning strategy. Best strategies involve having multiple units or diversified rental income streams. For example, if you buy one place and you only rent it out to one person and that person stops paying, well, now your rent goes to zero. And that is a detrimental situation, especially when you're starting out. So make sure that you find places or have a strategy that gives you multiple rental income streams or opportunities by having multiple units. The third thing that makes a winning strategy is having the opportunity to create higher rental income and accelerate your gains. These are properties where you can add more units or do something inside cosmetically and make it more of a premium offering in the market. If you're able to find a property where you can add value and increase the rental potential, well, now you're forcing the appreciation on the house and you're also increasing your cash flow. And that is a winning strategy. And the way to do that is by finding houses that you can either create units or finding some distressed type properties that don't look the best and renovate them to the modern standards and increase the rental potential. That offers recession proofing. You wanna find an area where the rental demand is high. So in case there's a downturn in the economy, people are losing their jobs or something just bad happens, you still have an area that offers high potential for rental demand. This makes it so you're protected and you'll be able to survive those economic downturns and keep going and not be in a position where you are forced to sell. Lastly, you should always think about your learning experience. You want to find houses that give you an opportunity to learn how to manage people, manage tenants, getting into those issues, learning how to solve them, learning how to put systems and processes in place to maximize the efficiency and the profitability of this asset that you own. Getting into the real estate game is like owning a business. You have to treat it like that. And I'm really hoping you watching this, that is your vision. I hope that's your goal. You don't want to just own one property. You want to own 5, 10, 15, 100. You have to focus on the big picture. Just because something happens when you buy your place and something goes wrong and you have to put some money into it, it doesn't matter. This is the game. This is what you're signing up for. If you do it right and you learn how to deal with it with a calm and collected mindset, and you solve the issues in a timely manner and learn how to do that without affecting your life, then you know that real estate is truly a very powerful vehicle for you, and you will get ahead and be able to make some serious generational wealth. So what is the strategy that I got in that checks all these boxes? Well, believe it or not, it's student rentals. Now hear me out. Student rentals, when you do it right, you don't have to think about the location. It's not that difficult. You just have to find a house that is near a college or university. So when it comes to appreciation, trying to guess where the hot market is, where the appreciation is going to be, or investing a lot of money in those hot hubs like New York and Toronto and California, you don't need to do that. You need to just find a place near college or university, and the appreciation will be there. Just by the nature of the property and all the other benefits of student rentals, people and investors understand that student rentals gives you a premium and a steady demand. This is what gives student rentals a very good way to hold their value and also appreciate as rental income goes up. Now let's talk about the cash flow. For student rentals, it's obvious. You're renting each individual room out instead of a single house. So let's think about this. One of my houses that I have is a 4-bedroom house, just a normal single family home. If I rented that out, I could rent that out probably for around $2,500 per month. But I chose to rent this to students, and I was able to get over $700 per room because I was able to add different furnishings. I made it very nicely done. I offered premium services like cleaning and internet, and that was good enough to offer premium rent because this is what students like. So I was able to get well over $2,500 per month, and that is all extra cash in my pocket. And this is the way that you can accelerate your path to financial freedom. This is the money that you reinvest into the house to make it even better. That same house, over the years, I expanded it. I went from 4 bedrooms to now 7 bedrooms. I added a completely different unit in the back. Now this property is worth so much more, and my cash flow is off the charts. So this is why student rentals could be amazing when it comes to appreciation and cash flow. Because the nature of the strategy, you're investing in areas that have steady demand because of the students, and also you have this opportunity to increase and have higher cash flow. So now let's talk about the stability of income. Like I said before, one of the killers to beginner investors is buying a single family home and only renting to one person. If that person chooses not to pay rent, somehow something bad happens and they just can't do it, that is detrimental to your business. With student rentals, if one student stops paying, well, you still have all the other students and the other rooms subsidizing and paying the rent. So the chances of your rent going to zero is very low. Also, students are backed by government loans and their parents. So the chance of them not paying, again, is very slim. So the strategy in itself is very stable and the income coming in is protected. Now let's talk about recession proofing. When was the last time you ever heard of a college or university shutting down? That's never happened, especially when the trend is for higher education. That is continuing to grow. Students are coming from all over the world. They're able to come to America or North America for that higher education. The demand is there. And again, with student rentals, if you do it right, if you find a place near a college or university, the demand for housing is always going to be there. And universities and colleges do not shut down, even when the economy slowed down. There's always gonna be students that need an education, they're pursuing their degrees and diplomas, and they're going to need housing. So this strategy in itself is a recession-proof strategy. And lastly, when it comes to the learning experience, student rentals is just like any other rental strategy. You're dealing with people, you're dealing with profit and losses, you're learning how to optimize, you're learning how to create new ways to increase your rent, you're looking for creative ways to offer new services. This is truly a business. You are learning how to operate your own business. And if you do it right and you succeed and you're seeing your profits accelerate, that means you are in a great position and you have the skill set to take this real estate game to the next level. So if you want to get deeper onto how student rentals worked for me and how I made over $254,000 in less than 6 months, click this video here.